power, tariffs, and your wealth plan. We want to be navigating this new investment landscape, the trade wars that are out there, the tariffs that are being implemented, and some of the global economic shifts. Now, there's a lot of headlines that are out there, and they're not just about politics. There's a lot that's out there that can actually directly impact your investments, though, and your wealth plan. And that is directly going to impact your financial future. Power, tariffs, and your wealth plan. We need to be navigating these new landscapes with the investments. When it comes to trade wars, tariffs, power, tariffs, and your wealth. Navigating these new investments, the new landscape that's out there with trade wars, tariffs, and the global economic shifts that are happening are really just a lot of headlines that aren't even all about politics. You see, these are directly relating and impacting your investments, your wealth plan, and your financial future. Now, just in the last few weeks alone, we have seen new tariffs on China and Canada and Mexico, and this has really sent some shockwaves through the stock markets. Well, yes, we have threats of 25% tariffs on semiconductors and different ways like Nvidia, AMD, Apple, that they're going to have to operate in the future. But here's the key question. Are your investments prepared for what's coming next? How will these tariffs, the things that we're seeing from President Trump, really impact the markets, and then ultimately your wealth plan? And then what sectors could be the biggest gainers and which ones have the biggest risk? That's what we need to really be asking now and figuring out how to position your wealth plan, your strategy to weather some of the storms to come. Now, if you're a business owner, a retiree, or a high net worth investor, you can't afford to ignore these trends. And what we're going to do is break down some of them. So the new tariffs that are out there and what they mean for the economy, the global supply chains, and your portfolios. And then how that could really affect the smartest moves that you're making right now to protect and grow your wealth. So let's dive in. Now, what we have seen is a lot of different trade wars that are starting to crop up and ways that we're starting to see not only tariffs be implemented, but also further the ones that are already in place. And so it's something that we need to be paying attention to. And the latest moves that we're looking at is really starting to shape some of the global investing. So here's what we know and where we have been going. Now, we have 10% tariffs on all imports from China, and there's an additional 10% increase is what President Trump is wanting. Then 25% imports from Canada and Mexico, including the targeted 10% tariffs on energy resources from Canada. So you can see how this is really starting to crop up. Then we also have what was proposed 25% tariffs on semiconductor chips, and the final decision could be in April. So it's not just about tariffs. It's our government that is trying to crack down on Chinese investments in American companies as well. Because what we're doing is considering removing some of the tax treaties and the benefits that we have been allowing the Chinese and other foreign investors to pay little or no tax on some of these US securities. So what this really means then is that Chinese investors in the US, especially technology and infrastructure, may actually start to grind to a halt. Because what happens then is that the foreign investors, particularly from China, may start pulling money out of the US instead of putting money into the US in some of our assets. So big technology, semiconductors, and even some of the global supply chains really depend on these companies, and there could be a lot more volatility to come. So that's where we have to step back. What does that mean for you? Now, when President Trump starts to impose tariffs and reshape the economic policy, there's going to be some ripple effects, and some are positive and some are negative. But if we're managing serious wealth, your retirement plans, your business plans, your legacy, we need to really start thinking strategically then. Now, here's what some of these new policies could do to your portfolios, especially when we take a look at market volatility. You see, that's one of the elements that we look at on a daily and weekly basis. And right now, that volatility, the uncertainty, is rising. So when the uncertainty enters the market, stocks get more volatile. And we've already started to see some major sell-offs in technology and semiconductors companies like Nvidia, AMD, the Taiwan semiconductor manufacturing company, and many others, obviously, to say the least. But now what we also see is that China can retaliate as well. And if that happens, that could also impact the exporters, our supply chains, and also then some of the investment flows that we're starting to see. So where do we go then? Well, let's take a look at another element here, interest rates. So we have interest rates, we have the currencies out there. So whether it's the US dollar, the Japanese yen, the Chinese yuan, what we're starting to see is that the Federal Reserve is paying a lot more attention to this. And it's because of the fact that these tariffs could cause inflation. So interest rates could actually stay higher for longer, but then they may not. Because as we're starting to shift into different economic elements and structures, interest rates may actually come down as we're starting to see inflationary pressures start to subside. So where do we go then? Well, like I said, tensions with China can actually escalate this, and the dollar could go up because of that. But what we're also starting to see is that if US manufacturing is benefiting from this, if we actually start to see some of these come to fruition, the US dollar may actually go down in value. The interest rates may actually go down instead of up, which we're projecting. So things may actually change. Well, if we're starting to see that happen, then we can start to see some of these really nice buying opportunities. So technology, semiconductors, they may face some higher costs, supply chain disruptions, but others like energy and infrastructure could actually see some opportunities for investing into as we're pushing more and more into making some of the production here in the US. And then we start to see defense and cybersecurity as ways to gain traction as well. So those are some of the things that we're looking at here and some of the things that you can be considering. But I want to have one element here that you can be working on as part of your own wealth plan. So when we see this, when we see the risk that is out there, the ways that volatility is increasing, we want to reduce our exposure to the countries that can be impacted, especially by the tariffs. So if you hold investments in some of these countries that are possibly going to be affected the most by tariffs, maybe it's time to consider investing other places and de-risking from those countries. So that could be a way that we shift towards other areas. So whether it's US-based technology and energy, or even some of Europe that may not be as hindered by tariffs, that's where we can start to see that we can start moving some money around. Now, second element here, we want to rotate into lower risk assets as well. So when we have volatile times in the market, the ups and downs, we want to go into investments that aren't going to have the same downs as maybe they had for ups. And that's where if we can shift some of the portfolio into some of these lower risk assets, or what we call lower beta, so then we can be lowering the overall ups and downs of the overall portfolio that you hold, and that alone can help protect and put a hedge around some of your wealth. Yes, bonds have not been a great place to be invested, and if we start to see interest rates go back up, they may not be still, but they are an element that could provide some stability when the stock market sees a huge sell-off. Then we have defensive stocks, ones that are in sectors like healthcare and utilities and consumer staples. They tend to perform better in uncertain times. So those are some things that we can be adding in. So we can be de-risking as well as adding in some other investments. Then we want to make adjustments to your long-term plans as well. So let's not forget about some of the 529 education accounts that you have, or some of the other educational accounts that you have earmarked for your kids and your grandkids. You see, if we're going to be needing those assets in the next couple of years, maybe it's time to reduce the overall risk in those investments as well. But then your charitable contributions, your donor advised funds, and even some of your foundations. If you're planning on making the donations out of these funds in the next, say, 12 to 24 months, maybe we move some of those into more safekeeping, lowered risk investments so we can avoid some of this volatility. And then there's your retirement accounts, your cash value life insurance accounts, and some of the other very long-term ones. Well, these can have some stability to them, but they can act as a buffer then against some of the market turbulences that are out there. So you can see that there's a lot of opportunities that we have. And right now, we need to be ready to de-risk, but more importantly, we need to be ready to act quickly when we here's some of the all clears and the markets are going to start recovering. And that can happen if all of a sudden we pull back in tariffs, if we pull back in some of the different elements of what we're talking about here, and whether it's with the Doge and what we're doing with layoffs, whether we're starting to see more and more of the private sector pick up some of these jobs, then you can start to really see how the stock market can take off, and we need to be ready to be invested. So that's just it. We need to have a plan. We need to be able to shift back into growing those assets once the dust really settles. So that's where we can start to watch some currencies, the interest rates, and even some of the international responses. And they're all going to give us clues when we can have that investment window start to open. So yes, despite all of this uncertainty, despite the tariffs and all the things that are causing instability right now, there's a lot that we can do for US manufacturing, energy, moving production back to the US. We can be looking at all the different technologies like AI and automation that's coming up, and even some of the different labor costs and how we're going to be structuring them as well as possible opportunities. But then let's not forget the alternative investments that we have out there as well. So the structured notes, real estate, commodities, private equity, these can all be ways that we can help to stabilize and give you some opportunities with your wealth and ultimately the wealth plan that you have. So when we take a look at all this, we want long-term success. But there are pivotal moments, like right now, that we need to be really aware of what's going on with the tariffs, the trade policies, and some of the investment restrictions that are out there, and how that may actually affect some of the markets in the future. So here's what I want you to understand. Uncertainty creates opportunity. And as a really good investor, you really want to stay informed with some strategic moves and be ready to adapt wherever we have the ability to preserve, but then to grow your wealth plan. And that is where we're at right now. So I hope this helped you to better understand a little bit of what's going on out there. Here's what I want you to do. Hit the like button down here and subscribe to our channel so you don't miss these deep dives and some of the tips and tricks on how to build your wealth strategies. You can also send us an email with some of your concerns and some of the things that you're thinking about. And we definitely can have a conversation. And if you want a personalized plan to adjust your investments and to figure out the next steps for your overall wealth plan, feel free to reach out. We're going to see you right here in the next video.